would you loan me money for 30 years at 3% interest rate? Like, can you imagine that? If the inflation rate was 8 or 10%, would you loan money out at 3% interest rate for the rest of your life?
Not in a million years.
Okay, that's what the banking executives in the U.S. did. For any amount of money you want to keep the rest of your life, if you want to give it to your kids, if you want to actually retire on it, anything that's investable asset, you would put it in Bitcoin. You would put it in the strongest possible world currency, the global money, and that's Bitcoin.
The largest bank in the United States, J.P. Morgan Chase, acquired the deposits and assets of First Republic Bank, located in San Francisco Bay, 2 weeks ago. Despite efforts by regulators and policymakers to reassure depositors that this is not a repeat of the global financial crisis of 2008, experts have pointed out the uncanny parallels between the two. Especially the ways in which major financial institutions like J.P. Morgan Chase have benefited from the financial crisis that began in 2008 and continues to this day. However, there are also many distinctions, the most striking of which being the scale of the current collapse. There have been 4 major bank failures in the United States: First Republic, Silicon Valley Bank, and Signature Bank. When adjusted for inflation, the 3 banks' total assets of $532 billion were more than the $526 billion held by the 25 banks that collapsed in 2008. And there's nothing to suggest the downturn won't deepen in the weeks ahead. The economic headwinds have not subsided, and the factors directly responsible for the crisis, rapidly rising interest rates, massive amounts of uninsured deposits, and insufficient control by regulators, remain unchecked. MicroStrategy executive chairman and well-known Bitcoin enthusiast Michael Saylor claims that the current banking sector crisis demonstrates the validity of Bitcoin advocates' claims over the previous 14 years. Banks are legally sanctioned traps for entrapping depositors, and the fiat system is the largest Ponzi scheme. A person who is so naive as to think banks and other comparable organizations are flawless. Saylor is a new guest on the program, and he plans to talk about the increasing demand for Bitcoin in the present day of swift money. Down the cellar, inflation in the double-digit range, government censorship, and bank collapses. Michael Saylor thinks it's a horrible idea to leave your money in a bank, whether it's in the United States or a nation with an official inflation rate of 95%, such as Venezuela, Nigeria, or Argentina.
If you're trying to use money that requires banks, you can't trust the banks, right? You certainly can't trust the banks in Africa, in South America, and most of Asia. It used to be Americans thought they could trust American banks. Now they're realizing that they can't trust American banks. So the first order impact of the banking crisis is people think, well, maybe the money I had in the bank's going away, and so I ought to put it in a bank in cyberspace that isn't controlled by the government or by the bankers, and that's Bitcoin. The second order impact is the solution to the banking crisis is print more dollars. And if you print more dollars, the actual monetary inflation rate goes 10%, 15%, 20%. So you think, why do you think those bonds crashed? Because they're actually claims on dollars. Do you really want to hold $1 billion of Zimbabwe dollars? What if I offered you 10 billion Zimbabwe dollars? I mean, the answer is it's going to a nickel, okay? So if the paper currency keeps crashing, then you can't own anything that's currency related. You can't own a currency derivative. You need to own something that politicians can't print more of. Okay, well, that's oil, that's land. But the problem is, try hauling 100,000 barrels of oil from where you are to London, where you want to be. How are you going to do that? I'll give you $1 billion of land in Central Africa, and then someone takes over with machine guns and declares that everyone with large amounts of land now loses it. That happened in Zimbabwe. You're going to pick up the land on your back and carry it to France? So it's simple. If people lose faith in the banks, they lose faith in the currency. When they lose faith in the currency, they lose faith in the government. When you lose faith in the bank, the currency, and the government, and someone says, what can you trust? The answer is you can trust Bitcoin because you can custody your own asset, you can run your own node. And at the end of the day, even if the Chinese want to shut it down, they can't. If the Russians want to shut it down, they can't. If any nation state wants to shut it down, they can't. If the US wanted to shut it down, they can't. And so everybody wants something that they can trust that is beyond the reach of a corrupt politician, a corrupt corporate executive, or they don't have to be corrupt. They can just be well-meaning, trying to do the right thing in a misguided fashion. And meddling with your economic life. Money is a store of value, and there are multiple monies, and they're not created equal. So let me give you the world's worst money. The worst money in the world is like Argentine pesos or Venezuelan bolivars or Zimbabwe dollars or Nigerian naira. Weak money. The official inflation rate in Argentina is 105%. But that's the official rate, which is that understates it. The actual inflation rate would be higher. And if the inflation rate is running 100%, that means your money is losing half of its value every 12 months. That means that within 10 years, you have nothing. Okay? So bad money, bad currency or bad money loses all of its value over the course of a few years. In Venezuela, you lose all your value in 36 months. In Argentina, in 10 to 20 years, the Argentine peso was 1 to the dollar 21 years ago. If you had $1 million 21 years ago, the Argentine peso right now is about 480 to the dollar. So that's not a 99% loss. That's a 99.8% loss, right?
In how many years?
21 years. Okay, so what I'm saying is you don't have money if you have weak currency. Now let's take strong currency. Well, the strongest currency in the world is the dollar. That's not money. You're losing 99% of your wealth over the course of 90 years in the US dollar, maybe more. The US dollar, the only difference between the US dollar and the peso is whereas it takes 20 years to lose your family's fortune in the peso, it takes about 90 years to lose your family's fortune in the dollar. Right? My house in Miami Beach was $100,000 in 1930. It was appraised at $46 million a few years ago. Do the calculation. It's on a path to be worth $100 million, which means that the US dollar will have lost 99.9% of its value over 100 years. The strongest money in the world is Bitcoin, because Bitcoin is absolutely capped at 21 million. It is global money. You could take $1 billion of Bitcoin across a border. You can transfer it to a counterparty, and no government can interdict that, and nobody can inflate that. At the point when the
You're talking about Silicon Valley Bank.
All of them, right? Pretty much.
All these guys.
Not just the ones that went bankrupt, right? There's a host of banks. I think they had, what was it, like $800 billion of unrealized losses or something. A host of banks went, and anybody that bought mid-dated or long-dated bonds at the bottom of the market when interest rates were zero, they were loaning out money forever at 2% interest or 3% interest or 1.5% interest. And as soon as you redeem, what happened, of course, is the Fed raised interest rates from 25 basis points. Actually, the rates went from 0 to 500 basis points in 12 months, about. That's the sharpest increase in interest rates in memory. That in itself is, I'm not going to say what it is. It's just horrific, terrifying to think that any public servant would do that. But it's equally terrifying to think that if I was your money manager and if you had given me all your money when interest rates were zero, and I said, well, I guess interest rates will stay zero for the next 30 years, and so I'm going to loan it out as a bond and lock in a price of 2%, you would have thought I was crazy. No, there is no individual, no corporation, no rational corporation, no economic actor that would loan money forever for 3% interest when inflation is running double or triple that. What I think happens to the banking system is all of the regional banks, the small, mid-sized banks are at a massive disadvantage right now because the government is showing that they're not going to bail out those equity holders. So there's a migration of deposits from the small banks to the big banks. I think the JP Morgans, the Bank of Americas, the mega banks will continue. They'll be just fine. They'll be supported by the government. The small banks are going to struggle, and that's what you see going on right now. If you're a depositor, you'll probably get bailed out by the government. If you're a bond holder in the bank or an equity holder of the bank, you won't get bailed out, right? And so there's a crisis for investors, whereas everybody that's a depositor doesn't want to sit around and take the risk, right? Who wants any anxiety? So I think that to the extent that you rely on banks, clearly the world is waking up, and the U.S. is waking up, and they're thinking, I want to be with big banks. I wouldn't have my money in a bank anywhere outside the U.S. in a weak country, right? You need to be in a rich, strong country with a rich, strong bank. With regard to what individuals should do, I think the logical answer is for expenses. If you have expenses in the next 3 months, you have your expenses in the local currency, which is the peso, the naira, the whatever, because it's legally obligated for you to pay in the local currency. For the next 3 years of expenses, or 1 to 3 years of expenses, you put your wealth in the strongest world currency in the world. That's the dollar right now, but you make sure that you have that currency either self-custodied or you have it in a bank that you trust. That's hard. If you can't find a bank, if you were in Lebanon right now...
Can we trust you, bank?
If you were in Lebanon right now, you wouldn't put your money in any bank. You would actually put it on the Bitcoin blockchain. For any amount of money you want to keep the rest of your life, if you want to give it to your kids, if you want to actually retire on it, anything that's investable asset, you would put it in Bitcoin. You would put it in the strongest possible world currency, the global money. And that's Bitcoin. You're not going to get rich investing in dollars. And you'll lose all your money if your dollars are in a weak bank. And if your dollars in a strong bank, you'll just get poor slowly. And you're going to get poor. You're going to get poor rapidly if your money is in not the dollar, but a weaker currency. And you're going to get completely bankrupt if you trust a weak bank. And so MicroStrategy, by the way, we had like $90 million. We had $4+ billion worth of Bitcoin. So go figure, right? 98% of our assets are actually in the strong money. 2% is in the world's strongest currency in a good bank, in one of the big 4 banks, right? And that's about as much exposure as I want to a currency.
We hope you found this video informative and thought-provoking, and that it has given you a fresh perspective on the ever-evolving world of cryptocurrencies. Don't forget to like, subscribe, and hit the notification bell to stay up to date with our latest content. If you enjoyed this video, be sure to check out our other interviews and finance-related videos on Market Empire.